Before you go out and buy gold, wait just a moment. Let's pause and really think this through, because here's the thing. Not all gold is the same, and neither are the people or companies selling it to you. The precious metals world? It's a jungle. Slick advertising, fancy-sounding offers, products that look shiny but are barely worth their weight. And don't even get me started on some of the storage options. They're about as trustworthy as a paper umbrella in a monsoon. Now, I know this might sound a bit dramatic, but this isn't fear-mongering. It's just being smart, being aware. Because when you peel back the surface, you'll see a whole world of risks. Everything from counterfeit bars to shady pricing tactics. And if you're looking to gold as a way to guard yourself from larger financial chaos, well, the last thing you want is to bring on even more risk just by making a bad purchase. In this video, we're going to walk you through 5 questions. 5 critical, non-negotiable questions that every gold buyer needs to ask before putting their money down. And stick around, because there's a bonus point at the end that might just be more important than all the others combined. Let's dive in. So first up, do you actually know what kind of gold you're trying to buy? That might sound like a simple question, but trust me, it's not. Gold comes in all sorts of forms: coins, bars, medallions, jewelry, digital representations. And while a lot of it might glitter, not all of it belongs in your portfolio. If you're serious about using gold as a store of value, then you want to focus on what's considered investment grade. The rest, honestly, a lot of it is just performance. Flash, theatre. So what's considered investment grade? We're talking of gold coins and bars that are at least 99.5% pure, preferably sourced directly from LBMA-approved refineries or respected sovereign mints like the Royal Mint, the Perth Mint, or the United States Mint. These institutions have standards. Their products are globally recognized. They're liquid, meaning they can be bought or sold easily. And they're easy to authenticate, which makes a big difference when it comes time to sell or pass them on. You want 3 things when owning gold: recognition, liquidity, and verifiability. These are your anchors. And depending on your strategy, you might lean more toward bars or coins. Bars generally come with lower premiums, so they're more efficient if you're storing larger amounts of wealth. Coins, on the other hand, offer more flexibility. They're easier to sell in smaller chunks, and they give you more discretion, especially useful in volatile times. The key is to make your decision based on your goals, not on your emotions. You're not buying gold to make a fashion statement. You're buying it to protect wealth, to hedge risk, maybe even to preserve your family's financial future. So be clear with yourself. Why are you buying gold, and what kind of product actually supports that intention? All right, on to question number 2. Do you know what to avoid? Because here's the harsh reality. In the gold world, there are a lot of traps, and most of them are dressed up to look like opportunities. If it glitters and comes with a glossy brochure and some emotional story about limited mintage or ancient empires, it's probably overpriced. Here's what you want to steer clear of. First, digital gold that's locked into one single ecosystem. If you can't move it or sell it outside of one platform, that's a red flag. It's not real freedom. It's a golden cage. Next, semi-numismatic coins. These are coins that get marketed as rare or collectible, and they often carry heavy premiums that are totally unjustified. Dealers love these because the margins are high, but as a buyer, you're left holding a shiny object that might never fetch what you paid for it. Then there are long-term storage contracts that come with stiff exit penalties. If you're not free to access or move your gold when you want, you don't really own it. Also, anything involving leverage or margin. If someone's offering you gold on credit or as part of some fancy financing deal, walk away. Gold is a hedge, not a gamble. And finally, beware of the free storage for life pitch. Nothing is free, not in finance, not in gold. If someone says they'll store your gold forever for free, it probably means you're paying in other ways. Maybe through inflated premiums, maybe through poor security, maybe because the gold doesn't really exist at all. Here's a good test. Ask yourself this: can this gold be easily sold across borders without layers of paperwork and notarized documents? If not, if you need to jump through 6 hoops just to cash out, then it's not really gold, it's theatre, and you're the audience. Let's keep moving. Question number 3. Are you confident that the gold you're buying is real? This one might seem obvious, but in today's world, it's not. Counterfeit gold isn't some fringe problem anymore. It's real, it's growing. And during times of economic stress, it gets worse. Why? Because demand for gold spikes, and so does the incentive to fake it. We've seen everything: gold-plated tungsten bars, fake coins, even real bars that get re-stamped with fake serial numbers. So how do you protect yourself? It starts with sourcing. Always demand direct sourcing from LBMA-accredited refineries or sovereign mints. Don't settle for less. A legitimate dealer should be able to show you the entire chain of custody, where the gold came from, how it's been verified, and how it's stored. They should offer real authentication protocols, maybe even third-party verification. And ideally, they should offer a buyback guarantee, because if they're not willing to buy back the gold they sold you, that says a lot about its quality. One red flag to look out for? Dealers who source their gold from the public without conducting their own thorough testing. That means they're essentially relying on you to be the quality control. And trust me, you don't want to be in that role. Unless you have your own XRF scanner and metallurgical lab, you're just guessing. So take this seriously. Your gold is only as good as your ability to prove what it is. Authentication isn't a bonus feature, it's the foundation. Now let's move on to question number 4. Do you know exactly how you want to store your gold? This might be one of the most overlooked aspects of gold ownership, but make no mistake, where and how your gold is stored determines who actually controls it. And that question of control, it's everything. For some people, the idea of storing gold at home feels comforting, romantic even. There's something primal about it, right? You buy the gold, you tuck it away in a safe behind a bookshelf or buried in the backyard, and you feel like a pirate guarding treasure. But here's the rub. Your insurer probably doesn't share your enthusiasm. For small amounts, sure, home storage can work. Maybe a few coins, a small bar, something you want access to in an emergency. But once you're dealing with a meaningful sum, something that's intended to protect significant wealth, home storage becomes a liability, not a solution. That's where professional vaulting comes in. And here's what you need to know. Not all vaulting is created equal. If you're going to do it properly. You want vaulting that is allocated. That means your gold is not just a number on a spreadsheet. It's specific bars or coins that belong to you, individually accounted for, segregated. That means your gold isn't thrown in a big pile with everyone else's. It's stored separately in its own space, under your name, fully insured. Against what? Theft, fire, fraud, force majeure, you name it. If disaster strikes, you want a policy that makes you whole, not just a lawyer who shrugs. Jurisdictionally flexible. In today's world, political risk matters. What if you need access to your gold in a different country? Can your vault provider help with that? Can you move it across borders? Can you liquidate it remotely if needed? And finally, preservation of chain of integrity. This is a fancy way of saying, has your gold been touched, mixed, resold, or moved around in ways that might make future buyers question it? If not, and that chain is intact, you'll have a much easier time selling it later. No need to convince a skeptical buyer that the bar in your sock drawer is real, even if it is. Remember, the way you store your gold either reinforces your sovereignty or erodes it. You're not just storing metal, you're preserving trust, portability, and resale value. All right, onward to question number 5. Are you choosing the right dealer? This one is huge. Look, gold itself is easy to buy. A few clicks online, a quick phone call, a wire transfer, it's done. But trust? Trust is not so easy. And in this industry, your dealer is everything. They're your gatekeeper, your quality control, your counterparty. If you pick the wrong one, you're not just buying metal, you're buying a headache. Maybe even a disaster. So what should you look for? Start with the basics. Is this dealer well established? How long have they been in business? Are they incorporated in a jurisdiction with real regulatory oversight? Do they have a history, good or bad, that you can research? Next, are they visible in real financial media? Not just paying for glossy advertorials, but actually being cited as experts. That's a sign they're respected, not just shouting into a marketing void. Do they have direct relationships with reputable partners, LBMA-affiliated mints, professional storage vaults with strong reputations? Or are they using names you've never heard of? How about pricing? Is it transparent? Is it published publicly? Or do you have to jump through hoops to figure out what you're actually paying? And critically, will they buy your gold back? Without penalty, without long delays or excuses? A good dealer should make that process seamless, because a two-way market is what separates a real business from a fly-by-night operation. If your dealer disappears when it's time to sell or starts throwing up roadblocks, that's your sign. You didn't buy gold. You bought a liability. And that's not the kind of wealth you want to hold when the world gets chaotic. Okay, now it's time for what might be the most important point of all. Our bonus question. Do you truly understand why you're buying gold in the first place? I mean, really understand it. Because gold is not an investment in the traditional sense. It doesn't yield dividends. It doesn't send you a monthly statement or grow with compounding interest. You're not buying it for what it will do. You're buying it for what it won't do. Gold is not an upside asset. It's a don't-go-down asset. So ask yourself, what's your why? Are you hedging against inflation, protecting yourself from currency devaluation? Worried about systemic risk or government overreach? Are you planning for the next 10 years or building a legacy for the next 10 generations? Are you trying to achieve sovereignty or just take a speculative punt? The world's central banks, they don't buy gold because it's exciting. They buy it because it's insulation. Because when things break, when fiat currency fails, when debt markets wobble, when trust in governments evaporates, gold still exists. That's what makes it powerful. That's what makes it enduring. Gold is not a trade. It's a vote of no confidence in a system that prints away value, that borrows endlessly, that tells you everything's fine even when your paycheck buys less each month. When you understand that, you'll understand gold. So now, let's pull it all together. Because this checklist we've just walked through, it's not really about gold. It's about something much bigger. It's about what gold represents. You see, gold is more than just a shiny metal. It's more than bars locked away in a vault or coins in a velvet pouch. Gold is apolitical, verifiable and replicable wealth. It's not controlled by a central bank. It doesn't rely on trust in a government or faith in a balance sheet that no one's seen. It's wealth you can hold. Wealth that doesn't need to be explained, translated or notarized. It won't send you quarterly updates or pay dividends into your brokerage account. But when the dust settles, when pensions collapse, when the markets are closed, when the bank says, please hold, gold is still there. That's the point. Because there may come a time when your currency buys less than it used to. A time when inflation is no longer transitory. When your savings are quietly drained by policies outside your control. A time when debt loads become unsustainable. When your country's borrowing power isn't what it once was. Or maybe just a time when confidence, real, market-wide confidence, is gone. And in that moment, when uncertainty is everywhere, gold doesn't promise riches. It promises resilience. That's what makes it unique. So if you take nothing else from this video, please remember this. Gold is not a trade. It is a strategy. A long-term, deliberate strategy. It's not a bet that the world will end tomorrow. It's a choice to be prepared if things become uncertain, unstable, or unfair. Because if you're watching this video, chances are you already sense that something's not quite right in the financial system, that things are more fragile than they appear, that wealth in its modern digital form isn't as solid as we once thought, and gold offers something timeless in a world of noise. It's not speculative, it's foundational. It's not about chasing yield, it's about holding ground. At Goldcore, we believe in this philosophy. We help clients not just buy and store gold, but actually understand it, not as a commodity, not as a speculative punt, but as a base layer, a hedge, a vote for sovereignty and security. So if that's the kind of approach that resonates with you, if you're looking not just to buy gold, but to understand its role in your broader financial picture, then you're in the right place. And if you want a simple, step-by-step guide to help you move forward with clarity and confidence, we've got something for you. Just click the link below and download our free Gold Buyers Checklist. It walks you through everything we covered today and more, so you can take the next step from a place of knowledge, not fear. Because in the end, gold is more than an asset. It's peace of mind, it's protection, it's sovereignty in your own hands. And that, That's worth far more than just a price per ounce. Thanks for watching. We'll see you in the next video.